Hey folks, Dan Frio here with you on this, what is today, June 10th, 2026. So we got some breaking news on inflation. Consumer inflation came in at 4.2%. The Federal Reserve wants this thing at 2%. So if you're sitting there trying to figure out, okay, where are mortgage rates going to go from here, if you're looking to buy, maybe refinance, I got some more news for you. If you go over to this next section, Trump says Iran will pay the price and claims they have taken too long to agree to a deal. So if you see these in this news, what do you think is going to happen to rates today? Well, that's what we're going to go over in today's video, folks. So thanks for joining me. My name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer. I'm licensed in all 50 states. We have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? I'll give you that at the end of this video. You're here for these. So let's get to it. So here's where we saw rates. They didn't really move yesterday, and that was kind of astonishing. But if you want to check out rates, here's where we start each day. I go over the rates, then we're going to go over to the bond market and basically give you all the economic news today, and there's big news coming out tomorrow, and what my estimations are on where rates are going to go from here. So stay to the end of this video. I'll give you what I'm advising my clients to do at this time. So it's kind of like my forecast. So without further ado, let's get to today's news. Rates are 6.68. We can't really do anything about that, but what we can do is track where they're going from here. So I like to start each day with the chart. So here's some good news, I guess, is we start each day with this thing. Okay, all you have to understand is that number at the top up there. If it's green, that's good. That means mortgage rates, well, they're getting better, but they're not getting any worse. Put it that way. Because that number has to move to at least about 10 to really change any direction. So that's what we're seeing today. So we're going to take a snapshot of that, but let's just take a quick glimpse of what we saw yesterday. It's all over the map. Okay, so right now we're +4. So mortgage rates really aren't going to move. The good news is they're not going to go up based on this information. But let's get over and really dissect what's going on. So today we got the consumer inflation numbers. It's 4.2. It was higher than a lot of people expected. But the good news, I'm going to show you the economic calendar because we got a lot of information. Some of the information is telling us that if we take oil out of this stuff, the inflation number is looking pretty good. So that's what we're going to talk about here in a second. And then on right through here, this is going to be the headlines because once I show you where the core inflation came in at, you're probably going to give that a thumbs up. So that's going to say, okay, as soon as this Iranian war is over, all we got to do is track oil. That's basically going to tell us where inflation goes. So let's get over to the calendar so I can show you exactly what's going on. But right here, here's what we have oil going on right now. It's up. It's in the green. That means prices of oil going up. So I can almost assure you that the other markets are down. Let's check it out and just check. Pre-markets, and the Dow Jones is down 200. It just popped. The S&P is down 22. NASDAQ's down. We got oil up, and the U.S. Treasuries are down. So let's get over to the economic calendar. Here's the data. This is all the data that everybody's been watching for. The markets, and remember, the Federal Reserve is meeting next week. We're going to have a live event that day. And we know what they're going to do, and I'll be a spoiler alert. I'll tell you that here in a second. But then we're going to show you after the fact. This is Kevin Warsh's first meeting. He's the new Fed president, and this is his time to kind of shine. He's going to come out, and he's going to answer a lot of questions. That's when the markets are going to move. That's where we're going to go live. I'm going to show you how all that works. But here's what we got today. So this is interesting. So we got 4 pieces of the puzzle in today. So here's what we talk about. And if you watch me every day, you kind of get this, but I want to break it down for you. We got 4 pieces of consumer inflation. So the CPI, that means consumer inflation. Just think of the C on the front of that as consumer. Tomorrow, we're going to get producer inflation. Now, that's going to be when we put those two together, then it's going to really tell us what's going on in the markets. But let's go through this. Core strips out food and energy. Okay, so we got the core CPI. This is giving us month over month. And then here's core CPI year over year. And this is kind of what the markets usually show you. Okay, 2.8, 2.9, so forth. Then we're going to get CPI, and this includes the energy prices. Okay, month over month and year over year. Okay, so here's what this is telling us. If we just go CPI month over month, it went from 0.6 to 0.5. Okay, that's saying inflation's going down even with energy. Okay, even the more interesting thing is, here's where the news gets bad. Year over year, it went from 3.8. Well, they had thought it'd go to 4.2. So basically, the CPI year over year is at 4.2%. This is kind of what you and I pay. We wanted it too. Okay, but let's go up to the top. If you strip out food and energy, what's that number look like? Well, if you look at month over month, look at this, 0.4, and this is where I'm going to admit I was wrong. I said there's no way this thing's going to go down. It went down. It actually went in half, okay? So it went from 0.4 Analysts thought it was going to come in at 0.3. It came in at 0.2. So this is half of what the markets, where we were last time, even below what analysts expected. This takes out the energy equation. So if you look at this, you're saying, okay, month over month, if we strip out energy, inflation's going down. Now, I know a lot of people are going to say, okay, these numbers are baked, they're fake or whatever. This is from the government, so you got to trust something, okay? Then you go year over year, it was 2.8. They said to go to 2.9, and I was also saying, okay, this is going to go higher than that. Well, it didn't. Well, it went higher from where it was, but it pegged it where the analysts expected, at 2.9. So that's telling us, okay, if we take out energy, inflation, it's not good. It's not at 2, but it's staying steady. So now let's go down and see if you add in oil. Here's where we're at. Month over month, we went from 0.6 down to 0.5, but here's the scary part. The year over year went from 3.8 to 4.2. That's a pretty big jump, and that's what the markets are going to advise you on. But when you're watching this channel, you're going to say, okay, yeah, the inflation's up, but the core, when we strip out food and energy, it's down. So now we know what to advise our clients. If you're a realtor, loan officer, now if you're a consumer out there trying to follow rates, now you kind of get it a little bit on how these mortgage rates work. It's on inflation, expectations of a lot of things. But then tomorrow, here's what we're going to get. We're going to get jobs and producer inflation. So let's get over there. I'll give you my estimates on this, but I was wrong today. Hopefully I'm wrong tomorrow, but let's look at it. Continue. We're going to look at it. Initial jobless claims. How's the jobs market? It's so far so good. Last week we got a reading. There was 122,000 jobs created. It was double what was expected. So now we're going to say, okay, initial jobless claims, hopefully they just stay in line. What we want to make sure is that continued claims stays below 1.8. That'll be a thumbs up on that one. Then we're going to get producer inflation. So we're going to get PPI. Remember on the top, there was CPI, that's consumer inflation. If you go down to here, you see PPI, that's producer inflation. So how much are producers having to pay extra for stuff? Because if their costs are going up, well, they're most likely going to pass it through to us, and then our costs are going up. So this is kind of the beginning of the food chain. So if we go down through here, we're going to look at PPI, 1.4 previously. They're saying it's going to go to 0.7. That would be amazing, okay? And then you got core, went from 1 to 0.5. So this is also telling us on the producer side, a lot of these numbers are getting pulled out of it. So the inflation on the producer side, if it comes out as kind of cool as today's numbers, you might see some relief rallies here soon, but it's going to be predicated on oil. Okay, so now let's get over. I want to show you guys what does the Fed do? Here's what they look at, kind of give you an idea what really determines interest rates. Okay, the Federal Reserve, that's who a lot of people talk about. They control one thing. They control the federal funds rate. Federal funds rate basically is interbank lending. Let's say Citibank had to close their books today for the day, not close down, but they had to close down for the day for business, but they had to have, $1 billion in reserves. Well, they're short, so they need money, so they go out there and they get money lent to them from another bank or the Fed, and that's the rate that they pay. That's not rates we pay. But they look at the inflation number, the PCE, it's at 3.8. That's what they want it to. It's double. Okay, but we have an unemployment number that's under 5% on the unemployment rate. Anything under 5 is full employment. So we have full employment. We have inflation that's twice as much as expected. Now, we're also seeing that most of it is related to oil. So we're going to follow oil. But let's get over to see what's the Federal Reserve going to do at this next meeting. Remember, this is, what do we call him? Fed President Warsh. He's the new Fed president. Remember, we had Powell and Trump didn't get along very well, so he retired. And then now we have Warsh in there. He's handpicked by Trump. Everybody's saying he handpicked him so he can cut. I think he's stuck right now. So let's get over to see what the Federal Reserve is expected to do in 7 days. Yes, 7 days from today. Remember, we'll be live. Go down through here. The expectations are, remember, the federal funds rate, that rate that banks pay each other, 3.5, 3.75. Well, it's supposed to stay there until when? Well, until the end of the year. And then they're saying in December, the Federal Reserve is actually going to hike rates. Well, I'm going to be a contrarian on this and saying there's no way they're going to hike rates. Once you see the oil prices come out of this and inflation coming down, you're going to see the markets react to this. Plus, again, you have Warsh, who's handpicked by Trump. What do you think he's going to do? Lean, which way is he going to go? So that's up to you guys to determine that. So now let's get back to my section of what are we advising our clients to do? So we're getting contracts in every day, and a lot of clients are saying, what do we do? So here's what I'm telling you to do. Lock in. Okay, so here we have some benefits of working with me. Let me go over that with you in a second, but let me explain to you what we do. We have some clients right now, they're not closing for maybe 45 or 60 days. Well, how mortgage rates locks rate or work is the shorter the duration of a lock you need, the better your rate. So if we can condense that down to a 15-day, you're going to get the best rate. Or a 30-day is what we usually lock people in at. But if you're closing 45 or 60 days out, we're going to lock you in. But the benefit of using us is I work at a bank. I'm licensed in all 50 states as well as Puerto Rico. But the cool thing is we're set up with about 38 lenders. So here's how that benefits you. When you put in your information to us, we're going to pull your credit. We're going to get you approved through Fannie Mae, Freddie Mac, whatever entity we need. And then we're going to get search rates for you, just like you would. We're going to put your information in all the databases and find out who has the best rate. So if you're looking to close in 60 days and we lock in, we're going to say, okay, if rates plunge from here before you close, maybe we got a 30-day window. No, it might be getting a little confusing, but I'll move you from the lender we are with and go to another lender that has a lower rate at that time when we rescan. I need at least 30 days to get you closed, so that's what we're going to help our clients with. So if you're closing within 30 days, even 45 days, we're locking you in right now, and we're going to use the benefits of working with us, with all these lenders that we have for that. But if you're looking to refinance, if you're just doing a rate and term, I'd be sitting on the sidelines right now. Put your information in. I'll give you some tools here that we can track these rates for you and help you track those. But if you're looking for a debt consolidation, that's what a lot of people are calling us for right now. So does it make sense to actually refinance your 4 or 5% mortgage and pay off those credit cards are at 15 or 28%? I'll give you some tools here in a second as well. So if you're looking to, refinance just your rate and term, maybe put your information in. But if you're looking to buy or build down the road, please watch oil. That's what's going to predicate where mortgage rate's going. And please subscribe over there so every time I post a video, you'll get an alert. And you can watch and we can follow where rates are going from here. So let's get over to some of the tools I can give you real quick, and then we're going to go back to the chart and see where the day takes us from here. So here's our store we have. Now, unlike most stores, this stuff's free. Okay, so if you're a mortgage loan officer, check these things out. These are really cool. You're a realtor, it's going to help you qualify your buyers right through here. What do they qualify for? You're going to break it down all the way down to the program and almost to the payment to the penny, because it's even going to help you with taxes. But what a lot of people are using right now is the debt consolidation analyzer to see, does it make sense to really refinance all that debt into your main mortgage, or should you be better off getting a home equity loan? So that's what we have for you there. But a lot of people have been asking me, Dan, what would be my payment if this and if that? Well, we have an app for that as well. Here's how simple it is. Just go to it. You're going to go down through here and plug in all your information, what you're looking for. Here's the cool thing. You can actually get our rates in this thing. So if you're going through here and you're like, okay, what rate can I actually get? We'll go over through here. Get my actual rate. It's actually going to log into our systems, and you're going to search over almost 40 different lenders right here live. But you're going to need to know this information down through here. So if you don't know your credit scores and so forth, go to creditscoresandmore.com. It's a website I created years ago to help you with your credit. So here's what I want home buyers to do and homeowners to do. If you're looking to buy, please reach out to us. We'd love to get you pre-approved. We're going to get you pre-approved at a rate about 0.25% higher than where they are today. Why? I want to make sure if rates pop, you can still afford that house. If not, we'll reevaluate those numbers. But if you're a homeowner right now, you want us to track your rate for you to see, okay, when rates come down, can I save some money? Well, yeah, put your information into RateWatch 2.2 right up through here. What we're also going to track is you're going to tell me if my payment can go down so much, well, let me know that as well. So you can plug in here and say, Dan, when my payment goes down $200, $300, $500, let me know. And that's what we'll track for you. We don't sell the data, folks. It'll be me and my team calling you. So that's it for now. Let's go back over to the chart. The charts are +7. So remember, we were at +4 earlier. We need this thing to go up at least 10. So I think the markets are going to be a little wishy-washy today because of the Iranian situation. We're going to try to figure out what goes on with that. And then tomorrow's inflation numbers on the PPI is going to determine where the markets take us as well. So, folks, please subscribe over there. Click the bell so every time I post a video, you get an alert.